Friends, this is Martin from Seekage, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the quick stock market analysis show that we have daily, where we analyze the technical charts and then try to understand what happened during the day in the market, and also plan for a better trade for the next day. That's January 25th, Thursday, 2024. So we had a kind of bounce today. Is it bounce for real? We'll analyze the chart and see. If you're not subscribed, please subscribe and share to your friends so that it reaches out max. Thank you. So we have a wrap up here. You can take a screenshot if you want. If you're not, if you're having audio issues or something, this could help. Let's get the charts first before we deep dive into each of the details in there. So here we have the plain charts, the candlestick. Look at this, a wide range body with very positive close, 1% more, 200 something, 15. Very good bounce, and that bounce happened very close to the 50 exponential moving average. That is also a zone where the previous resistance was broken out, was taken out, and then market broke out. So it's a kind of probably a change in priority bounce, you can say. And this is not really a piercing pattern, almost a piercing pattern. I can say piercing pattern has to be 50% and above the previous candle. Piercing pattern is bullish in nature when in a downtrend, which could mean a reversal and then a continuation of the trend on the upside. But this is very little bit in less than a piercing, and also it was unable to close above the 20 exponential moving average, so that's what acts as a resistance now. Anyway, it was a very good attempt. It is a very good attempt. Correction is still only 4.5% on Nifty. Keep that in mind. And also the day began with a gap down. It trapped the bears actually today. Yesterday it trapped the bulls. Today it trapped the bears. Look at Banknifty, which is much more weaker, a sharper fall. That were around 2,000 points were lost from the top yesterday. Right, heavy 1,000 plus close to close bearish wide range engulfing candle that engulfed almost 3 days just in one day. After that, now we have another bounce, but that also happened after a gap down, and the 200 exponential moving averages, 200 exponential moving average, and 20 and 50 are very important. 200 is very important. So 200 was breached actually, but it looks like it managed to bounce up from there, so that could act as a support now. 200 exponential moving average. But the thing is, the wick size shows that the attempt was not as successful as it happened on the Nifty. It did face severe resistance at 46,500 nearby, and then it could not gain as much as the Nifty gained, and then finally closed flat. That's what happened. But look at this. It has this zone is also a 61.8 Fibonacci retracement level. So, but it had already breached the channel, and then it was falling sharp, and then this is a zone of a 61.8 retracement. Normally, anything on the upside or downside, if the 61.8 Fibonacci retracement is breached, then it can be heavily bearish or bullish either side. So here it was actually breached, but you don't have to precisely go with the exact number, but it looks like 61 Fibonacci and the 200, although it is breached, both are acting and giving some sort of support for the Banknifty, and a breach of that once again would be devastating. In effect, 44,500 is very crucial for the Nifty, for the Banknifty, right? because the falls can be huge and the correction could turn into a severe one that extends beyond the 10% if it was overall. Now the correction has become 8.5% now. That's a decent correction for that, although it's not the same night. So Banknifty also, there is a pattern of a head and shoulder on the daily. Head and shoulders are effective mostly on the medium term charts, but still the target of that could take it to the 21 to the 2700 gap. Before that we have another gap at 21,950, but that is the target of this if this works out. It's not necessarily it works out all the time, but there is a pattern that is bearish in nature. But in Nifty it was very good attempt, and Nifty also is retracing from the top of the channel, but has still not breached the channel, while Nifty has breached the channel from the top. First channel is breached already, so severe was the fall. So that's it. Now let's look at the support resistance levels. It remains more or less the same. For Nifty, the first resistance will be 21,750, which is the previous swing high, you can say, and then 21,950 is a gap sub resistance, and then 22,000 so is a rounding number that can be resistance. Similarly downside 21,140 could be a major support because it's a 50 exponential moving average, very close by that, and a previous swing low. Oh, right. So after that we have the gap at 21,950. Then 21,000 is there before that's a rounding number. After 21,700 is another gap. That's how the supports and downside would act like. Similarly, Banknifty on the upside resistance would be, first would be the 45,650 100 exponential moving average, then 46,700 the 50 exponential moving average, right? And then you have the before that you have the so the first hurdle would be 45,500, which is a 50 exponential moving average. Retracement, not 50 Fibonacci retracement. So just follow from that. So that could act as a resistance now. So also it's a kind of rounding number, 45,500. Now if 45,500 is cleared, then you have 45,650, which is a 100 exponential moving average. Then 46,000 rounding number is a resistance, and then 46,500 is a confluence of 50 DMA and previous swing highs. Okay. Then 47,000, that's our resistance in the upside. Downside, first support major would be swing low of today's candle. That's 45,500 nearby zones. There is also the 200 exponential moving average. If that is breached, then you stop at 43,950. Before that, you have 44,000 rounding number also. Any falls from that zones could easily take it to 42,000. So that's very crucial for Bank to hold its levels. It has already made a lower low, lower high pattern, while Banknifty, the higher high, higher low has not touched breach unless it closes below this gap at 29.50. Right, that's all it is. Let's quickly see more or less the same things that are written here. So they managed to close 21,450 above, positively 1%, 200. We're still below the 21k, below 20 exponential moving average. We're in the middle of the rally of 31% and 16% respectively from the previous and the previous to previous swing lows. Yeah, wide range bullish, almost like a Pierce battle. We have not talked about all this. We closed flat with 61 points up in the case of Banknifty. Positive close on both indices, but flattish positive on Banknifty because the gains could not sustain because of the selling pressure. The Banknifty again more weaker in the sense that it managed to close above the 45,000, but could not sustain to regain the 20, 50 and 100 exponential moving. None of that. Just managed to hold the 200 exponential moving average. Also remember, Banknifty has retraced 8.5%, twice almost as that of Nifty, although the rally is 26%, so a decent gain for the rally, I would say. The first sell is yesterday, 3,000 crores, and they as a small buyers. Today also some amount of sell-off might have happened from either of the institutions. I believe it must be the Fyers who might have sold again. So Fyers has been selling consistently for the last 5 or 6 days. That do 25,000, 27,000 crores in cash market alone. Whatever bearish in the futures yesterday. Anyway, so that's a big the Fyers institution sell that remains a worry. If resistance and support zones are known to us, not explaining that once again. Momentum is slipped to the sideways in the case of Nifty, but it's rising up now. Banknifty has fallen to the bear zones and remains there, but rising up. The trend indicator radix is showing that it's in the bear zones, crossed over there, and the bearishness is increasing actually. All the bands show the beginning of expansion to the downside on the case of Nifty, which means that more downside can be expected. And Banknifty very effectively it's expanding on the downside, indicating more downfalls as per the Bollinger Band study. So technically, the charts have lost the bullish momentum and the trend in the short term, and the slip to the sideways. In the case of Nifty, it has become turned into bearishness, you can say, short term. It did a retracement of 4.5 to 8.5% respectively on the indices, but the correction in Nifty is not fair enough considering the breakout vertical moves of 31% from the bottom swing. So some more corrections may be due there. In case the Banknifty is not able to hold the 200 EMA, it couldn't be really bad. Head and shoulder pattern analysis on the Nifty could be a threat, causing it to retrace furthermore to the 5% or 8% kind of range, at least 5%, to take it to 2,700 or nearby zones. Let's look back at this presentation and then look at the charts for the levels. It will clearly help you understand what the probabilities of betting on this support or resistance would mean. So all the major sectors are closed green today, and that's a very positive thing. All these sectors maintain sideways momentum now, except the IT and the pharma, the defensive stock sectors. The sector ranges of IT and pharma remains to be the bullish momentum on the short term. If you look at the heavyweight stocks that contribute maximum to the stock, they're all green today except ICICI Bank and TCS. That's close red. And Infosys still maintains the bullish momentum, while HDFC Bank has fallen to the bearish zones, the only heavyweight stocks from the 7 sectors, and all other heavyweight stocks are still rising up and in the sideways momentum in the short term. Using indices at the very top has been rallying just like our markets were doing, but there is some consolidation at the very top. It's happening. The Dow Jones has fell and rupee remains weak as before, above the 83 kind of levels. Crude oil is spiking up at the very bottom after a deep correction several months before. And gold is broken out and made an all high, and then sell-off happened, and then now it's consolidating this small spike up green on the top. So since corrections are happening, this may be the time for value investing, where every dip could be investment opportunities for long-term in quality stocks in the SIP mode. For traders, the direction was clear on the upside, but now it is turned partially sideways in Nifty, and Banknifty is turned bearish. So we'll have to wait for both to confirm the sideways movement for some days before we can confidently trade the non-directional strategies. Until then, it's a mixed bag, and we'll have to go non-directionally, although it may not be in favor considering the implied volatility and realized volatility spread difference is not in favor. Manage your portion size and trade carefully if the VIX is further spiking up. So VIX is cool off a little bit, and in par with what the market did today with the green close, so it's okay, but VIX is touch the 15 above. So if it is spiking above the 20, you have to be careful and control your position size and manage your risk. That's all in our hands. You have a monthly expiry that's coming tomorrow for Nifty and Banknifty. It can be very volatile on the leaser like that. Levels for the Nifty is 21,000 and 22,000, which means that the placement of the bets by the big players on the options put and call side has no clues. 1,000-point bets for the next expiry. It's a very wide range. Put ratio is close to the bullishness, but not bullish enough for the Nifty. But it's in divergence with what the Banknifty is showing, which is having a PCR of 0.59, which is bearish. And there also you have a very wide range of 3,000 points. That means it can be very choppy, very volatile. Option players have put in a very wide range while putting highest puts and highest calls. While writing that, they have put a wide range because they have no clues. So expect volatility tomorrow is all that can be inferred. So that's all I have. If you're not subscribed and watching this, please subscribe and share with your friends so that it reaches out to max. And that's all I have. Happy trading, happy learning, happy investing. Bye bye.